Well, good morning, real estate fans, and welcome to the Real Estate Show. I'm Alice Lema, broker John L. Scott, here with my good buddy Pete Belcastro. He's a broker at John L. Scott. And we're going to also have as one of our favorite guests, Giles from Mutual Mortgage. It's going to be a lot to talk about this week. We're beginning to come out of the coronavirus pandemic a little bit. Pete, what's been going on with you this week?
Well, it was really funny. I showed some property earlier in the week, but it just seemed there was a lot more people out, a lot more people driving. The stores that are open seem to be busy. I don't know. It just seemed it was so beautiful out. There were just a lot more people out. So I think people are really getting antsy, Alice, about lifting some of these restrictions. I mean, you got to be really proud of Jackson County here. We have only had one new COVID-19 case here in more than a week. So, we're really, really, really doing well, and people, have done a great job. And now it seems like we're wanting to get out and do something. And so that's the big argument, going on right now all over the country and in a lot of places is, when do we start coming back? And of course, that affects what we do. It affects what Giles and Mutual of Omaha Mortgage does,
Well, and it was a busy real estate week. It really was. And I think you're right. Some of the people are feeling a little bit more emboldened. And then we're following our protocols. So we've all gotten into the groove. We know how to do it.
Yeah, walked into, when I was doing virtual, we're talking about virtual tours and all that kind of stuff. I did that, didn't touch anything in the house, walked in, was very careful. And that's kind of the new reality that we face. But you're right, it was a busy week. We've got the latest stats for you as well. What's interesting about today's show is the interest rates. We have been saying this for months here. Interest rates are driving the fuel that drive this market. And are they, do you think, what's keeping this going the way it is? That's the question we want to ask Guy and other people, because this seems where we're at right now.
Well, and the Federal Reserve Bank met today and put out some predictions. So I think that's going to help the markets both here in Southern Oregon and nationally. And Guy Giles will be with us shortly to answer some questions about that and make some predictions. And it'll be a good conversation.
Sure will. He loves those prediction things, so we'll.
Well, and so do I. And I think that's why our listeners tune in on Saturday.
Absolutely, and he's right on the money.
So we're going to take a quick break, come right back. Alice Lema, Pete Belcastro, and Guy Giles. Well, welcome back to the Real Estate Show. I'm Alice Lema with Pete Belcastro here on KCMX News Radio 880 AM, and we are doing the Real Estate Show. And today we have one of our favorite guests, Guy Giles of Mutual of Omaha. Hi, Guy. How are you doing?
I'm good. Just trying to keep up with all the news and figure out what in the world's going to come next. So
it's been a crazy week. How are things going?
Well, I'm still busy. A lot of refis, but I've actually got a few more purchase contracts in the last few days. So I think that what you guys said is right. There may not be as many people just running around waiting.
Whoops, Guy, we lost your audio.
Go.
There we go. And folks, you just have to, during the corona, we're all working in separate space. So go ahead. Guys, say what you were saying.
Oh, I was just saying that the buyers that are out there are really serious. They go out and they look at a couple of houses and they're done and ready to go. So, I think if you're out there showing houses, these people are serious right now.
You know what it is? It reminds us of what the winter market was like. This is like the winter market, because the winter market has fewer people out showing, right? And fewer sales, but the people who are out looking are really serious. And that seems to be the thing. I was showing a property up in Grants Pass this week, and was going to show this property. It was $649,000 was the price. And it was been on the market 5 days, and she told me she has had 18 different showings.
Oh my gosh. In Grants Pass.
18
That's cool.
Was for, it was a rural property, nice place. But I was just shocked at that. And so the buyers are out there right now, and it's like the winter market. It's very interesting how we just kind of extended it out to seems like a few more months now because of the shutdown.
Well, and I think
And
we had a low inventory situation going into the corona pandemic. And then the people that do go on the market now as a seller, they get a lot of attention. So I think it really is a lot, like you said, Pete, like the winter market, where when you have low inventory, you have a lot more power as a buyer and as a seller because of that situation.
But
and the
we've
rates
always
are still
talked
good.
about, let's say,
So,
So Guy, what do you want to add to that?
well, I mean, if you couple that with the fact that the rates and the lending really hasn't tightened up too much. I mean, we've had a couple of things going on with some of the government loans where if you don't make your payments, I think I mentioned this in the last meeting, if you do the forbearance, then the servicer, the person that is actually collecting your payments for Fannie Mae, Freddie Mac, or Ginnie Mae, is on the hook for on the government ones anyway. They're on the hook for the mortgage amount. So that's scared some of the people, and it's created a few things like higher FICO scores for government loans. I mean, kind of
The
640 is
lenders,
more the standard right
you're
now.
saying the lenders are you're saying the lenders are requiring a higher score. Is that what you're saying?
Yes, yeah. I don't think that that's going to last forever, but it might be more of a 620 norm for a government loan coming out of this. 600 to 620. I don't know exactly where it'll land, but they're still trying to work out some of, again, these liquidity issues, because if 500,000 people decide that they need forbearance, then the servicers are on the hook for those payments, property taxes, insurance, everything.
Well,
and
Guy,
and
as a borrower though, doesn't that hurt your credit rating if you do that? Can you get a mortgage after that?
Well, yeah, I mean, of course, it's like the government always does everything. They throw it out there, and then let everybody kind of sort out what's going to happen. And I do understand that they had to work fast on this thing, but it's not supposed to negatively impact you. What's going on with this forbearance at this point? By the way, I did look up, a few different numbers, and on the government, as of April 19th, the forbearance was about 9.7% of all of the FHA VA loans were in forbearance. On the conventional, that's what typically most people do if they have a decent down payment, and Fannie Mae, Freddie Mac, the big guys that you hear about in the news
Uh-huh.
all the time, that default is about 4.6 to 5.4. And on your portfolio loans, meaning your well, what we also refer to as jumbo loans, meaning the ones over $510,000 in our county here,
Mm-hmm.
that default rate's about 6.5 to 7.3% right now. Well, default, as far as forbearance, people are not able to make their payments, but uh, and we've actually seen the pricing worsen on those ones. But overall, gosh, the rates are still good, and we really haven't tightened up a whole bunch of things other than a few credit scores on some of the government loans. So it's still actually a really good time to buy on my end.
So Pete, what do you have to add to that? You had some
well,
questions for Guy today.
no, guys, that guy's right about that. But let's talk about forbearance for a minute, because 11 million homeowners have done this. There's some guys, so like U.S. Bank now, because I got a loan from you for my farm, and
Hmm.
U.S. Bank now owns it. And U.S. Bank sent out this thing, boy, they just fill this thing out. You've got 6 months. We're just going to pick up exactly where you left off, and you're still responsible for your taxes and things like that, but no payment for that time. So they did that. Does that matter if it was an FHA-backed one or is a private lender, or are those all backed by the
It,
FHA, by the government?
it Yeah, I mean, it won't matter to you personally. It would just matter to the person servicing the loan. So if whoever's collecting the bill on that loan is the one that would potentially have to pay for the payments that aren't being made. And I really thought they'd have a resolution to this by now, but it really is coming. And basically the guidance from Fannie Mae, Freddie Mac, the kind of loan that you did, just a traditional loan, is that they want to do your forbearance in 3-month increments up to 12 months. So pretty much everybody's just getting offered, well, it sounds like you might have got offered a little bit more, but everything that I've ever heard was about 3 months that you could do it. And then they'll just kind of reevaluate it at that point and see if it still needs to be done. The big thing that people have to keep an eye out for is, don't just do this because you need some beer money this month. If you don't have
Right.
if you don't have a real reason to do it, then there could be ramifications for you, for the servicer, for everybody. And I know that it's just kind of been out there that, hey, if you need to do this, just go ahead. And need really is the word. So if you don't need to, be very careful about not making your payments. As far as us doing loans, if you are in forbearance right now and it's a legitimate thing, hey, I'm off work for a few weeks, we can't close your loan while you're there. But if you have a letter from your work saying, hey, I'm going back to work on April 15th, then May 15th, then we are able to go ahead and fund the loans, knowing that you are going back to work. But
Well, that's
if
interesting.
so if you're in the middle of a loan and you have to do the forbearance, or something happens with your job, that's another thing that's kind of changed is, right before the loan closes again, we've always done, verifications just to make sure that you still have your job, and,
Well,
that
that's
you
what,
hadn't
yeah, that's what they do.
taken out a couple of loans or something. But right now they are checking to see if, your hours have been cut. And if people aren't around to even do those verifications, that's causing a few other problems. But other than that, I haven't really seen a lot of interruptions in the lending side.
Remember, we were talking about how difficult it was getting to be to get appraisers because there was so much refinancing going on and all the sales that were taking place and they were delayed and things like that. Home inspectors, etc. All that was delayed. It seemed like it was so busy. And now, Alice, what do you think? It seems like that's kind of a non-issue anymore, isn't it?
Well, I think it just changed. We went from having a certain market condition and buyers and sellers reacting and doing business under that format. And then under the Corona pandemic, we have a different structure. We have different market conditions, but transactions are still happening because as Jim Remley, the managing broker of John L. Scott, is famous for saying, people still have to move. People still have life events during this time. And so part of our job as brokers and lenders is to be available to help them through this time, no matter what condition changed. And so I think it's just different.
You talked about need. The need. It's about the need, right? Because I've got clients, especially older clients. They don't seem. I mean, they're kind of staying put right now, and I don't blame them. So there's going to be that kind of demand from that clientele. But gosh, I was just surprised. I know we got a break coming up here soon, but I'm just surprised when you look at what's selling. We had, like I said, a $4.2 million property go pending this last week. We just sold this last week. They closed a $1.7 million property in Josephine County. So it's just all over the board, including the higher prices above 500,000. That's kind of our demarcation line. Above that or below
for Southern
that
Oregon,
price.
yeah, that is for Southern Oregon.
Shocking how many above that 500,000 range. Don't go crazy on it. About 5 to 700,000 range. There's just a lot of activity on that. That's where that 18 showings in 5 days went for that one property in out of Grants Pass. Wow.
Well, and the elder people, I have an awful lot of elder clients that are moving right now. They're putting their house on the market. They want to get a small mortgage, or they want to downsize right now while they can. And it just kind of depends, like you said, Pete, what your need is, what your situation is. Do you want to stay put? Do you want to do it? But if you decide to do it, Guy Giles can help you. The real estate agents, we're all here. We're all working with the protocols, but we're getting it done.
Yeah, it's true, Guy. I see that VA loans out there. Those are still. Are you still doing any VA loans, or are those kind of quiet right now?
They're part of that whole government thing. So they're okay, but they're not as good as they could be. So yeah. I'm really expecting them to drop 100 to 150 basis points in the next week or so.
What does that mean? What does that mean exactly?
Well, it'll basically mean just a lower rate by probably a quarter to, it could even be 3/8.
Oh wow!
Those have really gone up. I've seen, we had a lot of the funds. I guess that was one other thing. Some of the Chinoa funds and the Lakeview, these are the 100% financing alternatives to the USDA, kind of go away during this thing also, because of this, just again, the servicers having to pay the mortgage payments if there's forbearance. But the rates on the ones that are still around in the FHAs, I've seen them, gosh, as high as like 3.75, which I know that does not sound like end of the world rate, but
better than most of us. Geez.
Yeah.
When I'm locking people in on regular stuff at 3 1/8 to 3 1/4 without really charging any points, traditionally government loans have always been lower. So it's just
Yeah.
it's just a little inverted right now.
Yeah. Well, we've got a
Won't
break
last.
coming up, so hold that thought, Guy. We'll get a little more information from you on that. It's the Real Estate Radio Show. Pete Belcastro, Alice Lema, and Guy Giles, and we'll be back right after these messages. Don't go away. Welcome back to the Real Estate Show. I'm Alice Lema here with Pete Belcastro and Guy Giles. Pete and I are brokers at John L. Scott, Southern Oregon here in Medford, and we're talking to Guy Giles from Mutual of Omaha Mortgage today. You can check out our website at realestateshoworegon.com. We've got every show, about 11 years of radio shows, lots and lots of great content. So check that out. And we were just finishing up with Guy Giles when we took our break, talking about interest rates and forbearance during the corona pandemic.
Hey, before you do that, I want to say that last week, in case people want to go back and watch our show, Brad Hicks from the Medford-Jackson County Chamber was with us, and we spent pretty much the whole time talking about the pandemic's effect on the economy and jobs, which in turn have an effect on real estate sales, buyers, sellers, lenders, and the whole thing. So it's really interesting about what's happening and what's going to come out of this, because there's not every business who 2 months ago are going to come back at the other end, say, if we start loosening restrictions. And so really interesting, because that has an effect on everybody. I mean, it just truly does. Anyway, that was from last week.
Yeah, that was a great show. Yeah.
All right. Well, okay. So what are the rates today, guys? So tell us what you've been quoting people around. What are the rates that we're kind of looking at here?
Yeah, I mean, if you have a decent credit score, we're in the really low threes on a regular conventional loan. So
really,
and again, all this stuff is FICO driven. So there's loan to value. There's about 26 things that go into quoting an accurate rate. And a lot of times, even if you can get a decent rate, if you have a lower credit score, your mortgage insurance might be more expensive. Mortgage insurance is something that you pay anytime you have less than 20% down. But there's a couple of ways we're looking at that actually. Say you only have 10% down and a decent credit score. A lot of times we can do lender paid mortgage insurance where we pay for that and your payment only goes up, I don't know, maybe $10 or $15 a month rather than paying $60 or $80 a month for your mortgage insurance. So there's some pretty good options out there as far as that goes, but the mortgage insurance are very FICO driven. So that's kind of on a case by case basis as far as which way there is to go. But the really low threes would be the easy answer for that.
Well, and I think what's so interesting about that is people don't realize that when you talk to your lender, that there is some influence about the rate you get. It's not just cut and dried.
Mm-hmm. When people call me and ask me what my rate is, I'll say, what do you want it to be? I can give you a really, really good rate and take one of your kids, or I can give you a terrible rate and give you one of mine. And, it's just really, what makes the most sense. I've actually had, people just want the lowest rate in the world, but their plan is to just have that house for a year or two and then move. And you always want to make sure that anything you're paying in what we call points for having that rate, or, anytime you're with this online lender and they're promising you the world, you really want to look at what the cost is to have that and when the payoff time is, because there'd be nothing worse than, hey, I'm ready to move up in house, but I bought down my rate and now I'm going to, I'm literally 3 years before I kind of pay that back. So you really want to talk to somebody that has your goals in mind when you're locking in a rate. So sometimes the very lowest rate isn't the right answer.
That could be true. Yeah.
Well,
else?
and Pete, when you're out this last week with your clients and having conversations with them about buying in this environment, how many people are asking questions about essential services if their employment is based on their essential service category? Is that coming up much?
No, I haven't had that conversation. You mean essential services like what they're doing as the buyers kind of thing?
Right. When you go to show a property, when you're making the appointment, are the sellers asking that question? I'm just wondering if that's
No, I
becoming an
haven't,
issue.
but I've been doing virtual tours because right now I'm working with a lot of out of town clients, and so we've been doing virtual tours, walkthroughs mostly. So, but their issue is when can if I find the place, when can I fly out? Are the hotels open? Can I come out
Oh,
there? Can I fly here? Is Medford open? Can I eat? Those kind of things is what I'm getting because they want to come. I still think, and you've been saying this all along, that the demand after this has not gone away at all. And that's what's given, I think, hope that real estate is going to be the driving force, or certainly one of the big driving forces out of this. Remember what Brad said last week Brad Hicks said, what were the three biggest industries in the county? Remember what he talked about?
I think it's government, hospital, and
Medical was number one, right? Real estate was like in the top, anyways, top three there. Real estate, tourism, and medical, those three are the top three. And look how tourism's taken a whack. Medical's even taken a whack. So all these are affecting, I think, what we're seeing, but the demand for people wanting to come here, they're still out there, Alice, and they're going to be coming. So that keeps Guy happy. Hey, Guy, is this a good time to refinance at those rates now? Are you getting any of that, or did that slow down right when all this crashed?
Well, I still have a ton of refinances going, more than I want, frankly. I try to stay focused on purchase money, just you know, just because it's really hard to time a bottom. If you're going to buy a house, you always want to, have everybody's really anxious about getting in the house, and a low rate is really, really important. But with everything fluctuating, like I think on Tuesday or Wednesday, the stock market was up 650 points, and I mean, it's just up and down all the time. And that's just depending on where people are putting money. If they're putting it into the mortgage-backed securities, we're just having wild swings. So you lock somebody in one day, and then the next day, the stock market's way down, and rates are really good. You're still having that conversation. But yeah, I mean, overall, I don't know how they get a lot lower than they are right now.
Well, you always
still talk.
You always said to me that if you had a rate, it was like 1% or so higher than what I could get today in a refinance, that would be something that a homeowner should consider. Is that still kind of true? Do you think of that 1% range?
A lot of it has to do with literally, how long you've been in your loan and how much you owe. Because, I mean, if you're 20 years into your loan, I could save you 2 points, but you're paying so much towards your principal. A lot of times you're just looking at a different term. That's actually what I'm probably doing more than anything right now, is I'm shifting the terms. So you had a 30-year loan and you have a few years left on it. Say you have 10 years, 15 years left on it. We're doing a 15-year loan or a 10-year loan, and you're still paying the thing off earlier than you would have, and you have a lower payment. And if you wanted to continue making the payment the same way, it's pretty amazing what we can do. But I don't like hard and fast rules, just because everybody's got a little bit of a different situation, and I never want to be the guy that's like, oh, hey, I'm saving you $300 a month. But if you're starting that amortization all over again, we really want to look at the whole picture. So anyway, rules of thumb have never
that's
been.
really important. And I'll say it again. I don't think people realize how intricate that whole pre-qualification process is, and the interest rate you pay depends a lot on many, many aspects of your financial life. So please be candid with your lender and make sure they understand your whole situation so they can advise you properly.
Yeah, I mean, a condo is going to be different than a manufactured house. It's going to be different than a stick-built house, and just on and on and on. And there are a ton of variables. And another thing I think it's overlooked is somebody goes out and gets pre-qualified for $250,000. You know, and then it's like, hey, here's your payment at that. But because the taxes vary so much around here, you know, you really want to make sure that people are paying attention to the taxes on a given house, because I've seen that give some people some sticker shock in the
I
past.
wonder why that's not a line item on the approval letter. That should be done, because in Southern
Hmm.
Oregon, you can go anywhere from $1,000 a year if you're way out somewhere to $3,500 a year if you're in town in
Ab-
Jackson County taxes.
Yeah, absolutely. And because all of ours are, you know, all of our letters are customized, I have that conversation with them every time somebody says, hey, you know, can I get one for 250? You know, I want to know the address. I want to know some details about this thing before I just send out a letter, because I always look, and a lot of times they're pleasantly surprised because I've overestimated the taxes a little bit when I got them pre-qualified. I'll usually go an eighth to a quarter% higher in rate than the actual rates are at that moment, just because I don't want somebody at the top of their budget, you know, or what they can afford, because if something does happen with a rate, or they find something that's a little bit more expensive. So I find that, you know, that it just works a lot better that way. I think people would rather go, you know, find out it's going to be a little bit lower than a little bit higher.
Well, I'm really curious to hear about Pete's out of town buyers. Where are people coming from?
Oh my, well, I'm working with 3 different buyers, California and Virginia, and it's actually in Arizona. So
Wow.
so they're there, but
And
you
are they
know,
moving here for work, or are they moving here to get, like, are they escaping?
it's pretty much pretty much escaping. I think that's a good way to describe it. But I think they've all been, you know, looking here for some time, and you know, and we're just trying to get everybody together. On the other end, you know, where you talked about seniors and where they're going, you know, in smaller places. But what's really been hit hard that we haven't really talked about much are the senior living places, the senior independent living. You know,
Yeah. The assisted living and the nursing homes. Yes.
that is such a big thing, and we have many of them here, retirees here, who want to go into those places. That's what I'm talking about. Those are the ones that are kind of put off things because, well, they're waiting, you know, and yet sometimes, anyway, so it's all over the board. I'm a first time buyer as well, you know, Alice, that are out there looking. So it's just a matter of the inventory now. So before I know we got a break coming up here, but what were those statistics like? You know, we keep track of them every week. I always tell you that thing. It's affecting a little bit. Next week we should have all the SOMLS stats out for the month of March. It'll be, month of April. Month of April.
That'll be very
really interesting. But last week there were still 51 new listings in Jackson County, 51 pending sales, 35 sold sales. That's down from sold sales from 62 the week before down to 35. But across the board, a little bit. But what's amazing when you look at it week after week after week, it's so consistent. It's not like this.
There's not as much volatility as
like
you would
this.
think. Yeah, isn't that surprising? Yeah,
You wouldn't really know that we're in the middle of this thing, which is so limiting because the people are still out there.
Yeah, it's very surprising, isn't it?
Totally. It blows me away that there's that much going on. But it also says we live in a great place. People still want to come here. The demand is there. And the need, as you say, to buy and sell has not stopped.
Well, and now that the rates are so low, I think that opens up the possibilities for our locals. You know, our average income isn't great here, but when the rates are low, we can afford to buy property here too. So we're going to talk more about that with Pete Belcastro, broker John L. Scott, and Guy Giles, a lender from Mutual of Omaha Mortgage. We'll be right back after these messages with the Real Estate Show. And don't forget to check out our website, realestateshoworegon.com, for all of our past shows. Talk to you in a minute. Well, welcome back, folks, to the Real Estate Show. I'm Alice Lema with Pete Belcastro. We're both brokers at John L. Scott, Southern Oregon, here in Medford. And today we're having a great conversation with Guy Giles, lender of Mutual of Omaha Mortgage. And we're talking about the pandemic and housing in Southern Oregon, jobs, and the whole gamut. So, Guy, we're so happy to have you back this week.
Yeah, I can't imagine. I was thinking about everybody coming from all over the place, and what a disadvantage the people without that crazy 3D camera that you have would be trying to get a listing around here. Because everybody is doing these virtual tours, and I've talked to a lot of people that have been kind of cooped up in a little apartment in San Francisco or somewhere else. We've actually had a lot of Colorado people and different people, but I think once this thing gets freed up a little bit, they're gonna come and try to get into a little bit of a smaller place where they can maybe even have a yard at least they can go out into if anything ever goes down again. And I just see a huge influx of people coming from the big cities again. You know, now that everybody's working from home and has figured out that they're able to work from home,
Yeah.
there's going to be a lot of things shifting towards that, and that just kind of frees you up to live wherever you want to live. So I think we need to be ready. It's going to happen again.
I totally agree with you. It's going to happen. Think of all the people. Now, we haven't talked commercial real estate, Alice, at all. We just mentioned that Jeff Rogers, who's the owner of John L. Scott, told me this week that because he has 21 commercial listings, okay, leases and things like that, for lease for this. He says not one buyer. There's not one. There's absolutely no activity in that commercial thing.
Well, and I think a lot of that has to do with jobs. The commercial real estate cycle is way more sensitive to job situation and the hopefulness that business owners feel or don't feel at the time, where residential is on a different vibe.
But it's like what Guy just said, though, that it's changing the way we work. And you're going to have lots of open spaces. You're going to have lots
of that's a good point.
buildings.
Let's talk about that. When we come out of this.
Yeah.
What's going to happen?
Yeah, and you're right, because those who have now worked at home, and I've talked to a lot of people, my friends even, who've been working at home and love it, and they say they don't need to do these things. You're right, Guy. They're going to come here our way. We're going to get that. I absolutely think that that's true, because we're close to the cities, and yet we're far away, and you can work at home. We've got great internet, etc. here.
So Pete, do you think that maybe do you think that maybe instead of moving here and buying an office building and a house, they might just buy a different kind of house so that they could still work at home? Is that what you're saying?
Maybe that's why we're seeing all the higher priced homes kind of go on the market and so active from people. It's give me some space. I can work at home. I can do these things. Maybe we're seeing that happen right now. I don't know, but
maybe we look at converting
out there, and it's going to be kind of free for all. That's why when we look at the market ahead for the next month, in the month of May now that we're in, are we going to see more listings come up? Are we going
we are.
Are we going to have more choice for people, the buyers that are there? Are they going to be scooped up, or the price ranges again? What price range you're in also determines how fast it goes. But gosh, sellers are getting almost 100% of their final list price right now.
Yeah, isn't it like 98% right now? It's pretty high. The 98, what we're talking about is the percentage of prices sold compared to list price. But there's still plenty of people out there that are really too high. So yeah, if you're on the market for 30 days and you're getting showings and you're not in escrow, then either something's wrong with the house or the building, or you're too high.
Or you're too high. Absolutely. Guy, what first-time buyers are competing now with all this other thing that we talk about. So when they get ready to go, it's so important, isn't it, that they get pre-approved and outstandingly ready to buy something, or they're going to get left behind. So what are the things that a first-time buyer or any buyer really needs to bring to you, to a lender, to get this thing started? They can have it all ready to go so they don't delay.
Yeah, well, I mean, you kind of hit the nail on the head when you said pre-approved, because that's another thing that we're still doing, even though we're buried with a lot of these refinances right now. Pre-qualified is just not as strong of a word when you're out there trying to make an offer. You know, you want to make sure you have somebody that's actually analyzed your taxes, had the conversation with the people that hey, I'm not on reduced hours, I'm not on furlough right now, so you can buy. But really, if you're not self-employed, we don't necessarily need taxes anymore. You know, we're basically looking at 30 days of pay stubs, and then we're looking at 60 days of bank statements, and you know, a copy of your driver's license and your W-2s, and you're pretty ready to go. And with a lot of our AI that we have right now, if you're comfortable putting your banking information into our system, our system's actually reading a lot of that stuff, because they can see that you have a certain amount coming in. I mean, it's smart enough to realize, about how much, are you in a 25-30% tax bracket, where it is. And we're getting a lot of relief on documentation, where you don't even have to come in with that stuff. And it doesn't mean we're loosening standards or not, really pre-qualifying people. And underwriters always looking at the loan. They're, it's just a lot of the make sense things. You've been working for the county for 15 years. We can see your money coming in, your money going out. We see, your down payment there. So we're actually getting a lot of relief on that. And actually on appraisals. You guys talked about that earlier, and I didn't jump in, but we're also seeing a lot of exterior appraisals that you don't have to go inside now. I mean, it's kind of left up to the appraiser, but it's just there's actually been a lot of relief on that. So we're not seeing the bad, appraisals taking forever, or the loans. We're still able to close our purchases. Our average purchase close is still 23 days as a company.
Wow, that's
geez.
wonderful. Dang, that's
Pretty
3
good.
weeks. That's 3 weeks. So
Yeah,
3 weeks, a person could be moving into their new home.
Yeah, I mean, and
Wow.
I do like to ask for 30 days just because, if we do need an appraisal, then, that allows our appraisers to, have time. But thankfully, all the appraisers on our panel are the best in the valley that we've kind of handpicked. I can't pick which appraiser it goes to, but I can handpick who's on our list and who isn't. And we have just a great lineup of appraisers. So they get them done for us fast.
Well, we're going to be wrapping up here in just a little bit. I'd like to end on a positive note because the stay-at-home orders, at least in Oregon, are starting to be softened. I know California and Washington have a little different situation, but going forward, what do you think it's going to look like in the next 30 days here in Southern Oregon for housing?
It's a broad question there for housing. You talk
For the
more
real estate,
specific.
for the real estate,
Just for real buying and selling.
for buying and selling real estate.
Well, if the interest rates remain, as Guy has said, in that low 3 range for a 30-year conventional loan, I think our numbers. And again, I show this thing. I do this every week. On this across the 3 counties to do this. It really is continuing. So I don't think it's going to slow down at all. In fact, I don't know, Alice. I think it's going to continue. I think the biggest question is, when are people going to feel confident enough, the rest of the people, that these are the I'm ready to sell, not the I need to, I have to sell group, or I have to buy, that kind of group, when they're going to be ready to go. And I think it's really going to go wild again. But remember, in the $250,000 to $350,000 range, that's still the #1 range. Multiple offers on some of these properties. They go really fast. You have to be ready to get your offer in quickly in that price range. Above $500,000, a lot of more listings there and a lot more variety to choose from, I think, for buyers there. So, I think it's going to be a good month, to be honest with you.
And we're going to have to wrap it up there. Pete Belcastro, Guy Giles, Alice Lema saying have a great week and come back and see us next Saturday.
Hey, thank you.
Bye.
Bye.